Hi friends, Simit here from InformedTrades.com. Today's Friday, August 29th, 2014. Time for our daily Forex chart review. Basically, in these sessions each day, I share the trades I'm placing, adjustments to existing positions that I have on in the markets, as well as any chart patterns that I think are interesting and worth observing that we can learn from. Any trades I place and discuss are trades placed on a live account. You can see my entire trading history that is verified by myfxbook.com over on my blog over on InformedTrades.com. We also have a huge archive of learning material there, so if any information I'm presenting is unfamiliar to you, you want to check out other strategies, other markets, check out the learning section of Informed Trades, share your knowledge, ask questions. We can all learn together. Okay, let's get started with a look at the charts. Here we go. First up is a chart of gold. We've bounced off support at 1280. Resistance is at 1310, I think, is now the nearest resistance. But as we've been discussing, not much has changed in terms of the broader picture. We are still consolidating here. You can see a downward sloping trend line as well as an upward sloping trend line, converging trend line, symmetrical triangle pattern. We're near the bottom of that range. The top of that range is going to be around 1320. So range-bound traders may be interested in buying. Personally, I think it's a good level to buy with the expectation of holding much longer. You can sort of get the idea of how I see things from the monthly chart. So long as this low here, 1180, isn't really breached, I'm happy to continue accumulating, as I think we're going to get past this high here of 1920. Okay, so that's basically gold. Looking at Bitcoin, let's actually take a look at the daily chart. Okay, we are still having difficulty breaking above resistance at 522. The market is, however, it looks like we have an ascent. One could argue that we have a bit of an ascending triangle formation. So you could say there's something like this going on, right? And that resistance is here. I don't place much credence in ascending triangles aside from what it signals about a breakout in volatility coming. Where the range is contracting, so eventually we're going to break out to the downside or to the upside. There could be opportunities here from that perspective of putting on a volatility trade, not really speculating on a direction, but just an increase in volatility. As I mentioned, though, I think my favorite setup here is if price can rally to 555 or so. I think that'd be a really nice level to short from. I'm long from a little above 522. This green line here, a very binary outlook here where either it's going to go much higher, it gets widely adopted as a payment mechanism, or it goes to zero due to regulation or just new technologies or whatever it may be. So with that in mind, I put on a small trade that can tolerate if it goes to zero. It's within my risk parameters, and but by the same token, in order to make a worthwhile gain, I need to see a huge return of 10 times gain approximately. So that's sort of Bitcoin. Near term 522 is a resistance level to watch. Now on to the active Forex pairs. Actually remove some of these. Okay, Euro Kiwi. I have de-risked this trade, although I really would like to see price close below this orange line here. We did dip below it today. If price can close below 156.96, I think that's really encouraging for price to move all the way down here. If it doesn't, I think you could still argue that this is just an accumulation pattern for the next move up. If we can close below 56.96, I think a break south, a break below this resistance level really shows that the trend is bearish. So that's sort of the way I see it. Either way, though, the trade has been de-risked, so I'm not going to be losing any capital on this. The question is, will I gain any capital on this? And on to supportive of the bears is, the market, when it has gotten up to 58.22, 58.20, it's really shown signs of difficulty breaking past the level. We have a lot of long wicks here. So anytime it peaks its head above that level, the bears quickly come in or bulls are taking profits. There isn't much momentum or much strength in getting past this level thus far that we've seen, really since it first broke it on August 6th. Okay, so that's Euro Kiwi. Related to that is my long Kiwi yen position. So in both instances, I'm speculating on appreciation of the New Zealand dollar. I've been short Euro New Zealand dollar, and now I'm long New Zealand Kiwi. Update today, so that's been encouraging. And this trade has also been de-risked. It was on August 25th, this Monday, when price cleared above this orange line. Of course, I really would like to see price clear above this orange line. Lots of resistance levels along the way. This is the first one, but then we're going to find resistance probably here at 88.16, here at 88.90. So a couple resistance levels on the way to the target profit 89.65. This is a double top the recent high. There's a chance that this position I may hold it for a while, but we'll see. And as is the case with the Euro Kiwi position, this trade has been de-risked because it broke above the resistance level, it closed above the resistance level here. Okay, so that's Kiwi Yen. Yesterday's trade that I put on, or the order I put on yesterday that just got filled, short dollar Canada. And these charts are from TradingView, or excuse me, long dollar Canada. The position is very slightly out of the money, basically at break even. I would hope that, I guess obviously the ideal scenario is it quickly moves in your favor, but it is encouraging that we haven't really broken past the lows of August 27th. So hopefully this August 27th candle is a bearish checkmate, meaning that is the low. As I noted though in yesterday's video, my stop loss is at 107.76. The price will have to clear through the 50 simple and 200 exponential moving average to get to my stop. So that gives me a pretty solid buffer. I am holding out for a bit of a longer term. I did put my stop further away than I usually do. So I had to put in order to justify it, I had to put my target profit a bit further out as well. So holding on for resistance here at 11.22. That gives me a reward risk of about 3.94, risking 70 pips to gain 276. And that's sort of it for the trades and where I'm at today. Just to recap, I did not put on any new orders. My Euro Kiwi and Kiwi Yen trades have both been de-risked. Dollar Canada has not been de-risked. So that is sort of the one new trade. We'll see how that fares. That's about it for the trading for this week. Best of luck in your trading, and we'll see you next week. Take care.